Hello everyone, welcome back to another video. This time we are on gold. I'm gonna explain a trade that happened 2 weeks ago. So let's start with the fundamental analysis. First of all, you see this big uptrend that's due, of course, because of the US-China trade war. So you see every push, this one and this one and this one and this one was due from comments or tweets from Trump or comment from Xi that pushed the price up. And when we arrived here at this area, you see there's a bit of consolidation, just like here and just like this big one over here. And the reason why we have this consolidation is because we did not hear any new news from the US-China trade war. And actually, you'll see a bit later on, we started to get some relief. And as a trader, you have to be able to notice that and predict it a bit in advance. And so we had a neutral gold, and maybe we had some hopes that we're gonna see some positive news in the short term in the future. So that was the fundamental context, if we keep it simple like that. Now, if we look at a technical, well, first of all, we had this beautiful uptrend channel. Okay, so let me just trace it just like this. So beautiful uptrend channel. Here the heart line has been respected all the way, and right now the price has just broken the heart line, and we're just sitting underneath with the 100 EMA as well. If we add a few more trend lines, we have one coming up just like this, and another one. If I clone it, I could put it let's see, right over here. So we have like a key level trend line just here in the middle. This one is also very useful, it just respected all the way, but the lower one is very useful because the price could go back, touch it before coming back down. So if we go back to 1 hour, so we were in this situation right here. Okay, so as I said, price has broken. We had the 100 EMA that was just like this in 4 hours, and now we made also a lower low on gold, and fundamental neutral, and could be positive for the US-China trade war in the future, and then negative for gold. So we're looking for a short, of course. And if we just fast forward a little bit, right over here, so you see we have a bit of consolidation right under the 100 EMA. Now you don't see it, but if you go on 4 hour, you could see it. So a first position here would be wise if you could enter the trade right there. We are under 1520, the price 1520, just a bit below. Stop loss, once again, as I said in the previous video, I don't trade with a stop loss, but you would put it above the two EMAs here in 1 hour, the 200 and the 100 EMA, just to protect yourself. Okay, maybe you would get out of the trade sooner because it's a big stop loss. Remember that you have 4 obstacles. You have the heart line, the key level trend line, and the two EMAs. So it's up to you to decide where you want to get out. In my case, I would put alerts on all 3 levels and see if the price goes against me, what's the solution, and is there a shift in the fundamental conditions? Is there a shift in the technical analysis? So you have to take all those factors in when you're about to exit the trade. So yeah, that would be your first position. Then for the take profit, you could aim for the bottom of the channel, right? This big channel divided in 4. You could aim for the bottom of it. Okay, so you have a risk reward of 2.61, 434 pips, and basically as the trade progress, we're going to adjust it to make sure we put it at the right place. Right now we don't have enough information. We could do a fib from here to here, maybe to optimize the the take profit, right? So you have minus 61.8 and minus 27. So of course these two are going to be obstacles along the way. Okay, and just to be safe, let's put the take profit here. When the trade progress, we're gonna adjust it depending on the new information we're gonna get. So let's see what happens. Price keeps going. Okay, we have a big bearish candlestick. Market keeps going, goes back up right over here. Okay, so this is very interesting, very important. You see the market comes back up, touches the heart line and makes a higher high from the previous level. Okay, explanation why I think that happened is because when we made a lower low, right, when we broke this level, we had like a break hook go and a pullback and a continuation. So I think a lot of retail traders entered the trade here. Was kind of obvious at first. And if you remember my last video, I said that institutions like to bait or trick or go against retail traders. So most of the retail traders are going to put their stop loss here, right? Because they want a small, tight stop loss, and they don't, you know, take into account that there's 1, 2, 3 obstacles. So most of the retail trader stop loss were here. So institution pushed the price back up, touched almost all the stop loss from the retail traders, had a better price to re-enter the trade, and basically after that the price should keep going its original direction. Why? Because the fundamental didn't change. There's no shift in the fundamental at that moment, so there's no reason for the market to reverse. So when that happened, would be wise again to enter a position here. Stop loss would be just above the moving average. Here we have 3 moving average who acts as a wall and is at the same level as this trend line, and it could actually adjust this one a bit lower too since the price has moved. And take profit, let's put it at the same place here. Okay, so in this one you have a bigger risk reward because you enter at a higher price. And let's see what happened. We have a rejection, a bit of consolidation, and then you see the market going back down. Okay, so you see this is a trap. The retail trader were wiped out on this trade, and you know, we came back to almost the same level as we were before. Okay, now we could do another fib from on this level for an extension. See if we have some confluence with the fib before. So here you see some confluence, right? 127 with the minus 27, and here the 161, which is a bit above the minus 61 from the big impulsion before. Okay, so these are going to be our 3 possible take profit. I always put my take profit to the maximum possibility, but if I see the price coming here and having difficulty to break, I'm going to close the trade here. If I see it coming here and have a bit of difficulty here, I'm going to close it here. And if it just goes through and ends up at the maximum take profit, well, that's good as well, right? So let's keep going. Let's see what happens. So we have a bit of consolidation at the support, right? We're just waiting for that lower low so we can confirm that we want to go lower. We have that lower low and also to break this this trend line. So right over here you see the price going back up, touching the 50 EMA in 1 hour. Okay, so let's say you did not enter here, you had another chance to enter here, or if you entered bold position, you could enter a third one here. Of course, your positions on profit, you could even put these two in break even technically, and you know, be safe on that. And yeah, so let's enter a third position, take profits in place. Stop loss, I put it just right over, just a bit of space over the 50 EMA, and actually let me just adjust it a bit higher than the last high. Not this one, because this one I would say it was a stop hunt, but let's consider this one, right? Let's put stop loss a bit above. Once again, I would not put a stop loss. Me personally, I would put alerts and see what happens if that alerts rings. Okay, so oh well, there we have it. We have our lower low, right? Lower low, big bearish candlestick. We break the trend at the same time. Great, great, great. Now what do we have? We come back and we retest this level. So if I trace a trend line like this, well, we have a break hook. Looks like we could have a go right over here. Nice engulfing candlestick. We could even add another position here. Stop loss would be around here. Take profits right over here. So now you're 4 position in, okay? And I don't think at this point it's wise to add another position. Even this one, maybe you would have entered half position since you already have 3 big positions up. But since they are all in profit and maybe these two are on break even, and actually this one made a lower low, so you could even put this one break even if you wanted to. You could enter the 4th position, but after the 4th position, I'm not expecting to enter a 5th one. Now I'm expecting to look at the obstacle and see if we bounce somewhere. And just before, let me just add a few trend lines, just like this. Have a nice channel. I could put this one like let's put it like this, okay? And yeah, so that seems good. Let's continue, see what's going on. So we push, we come to the minus 27. Okay, so first obstacle, let's see what happened. Do we have a rejection or do we go through? Oh, looks like we go through, so I won't do anything at that moment. And we go directly to the minus, no, it's just the 161.8 from the reverse extension of this movement here. So this one we did not take a partial profit or a complete profit. We came to the 161, and let's see what happened here. Well, here we have a bit of rejection, right? And how many pips are we from the final take profit? We are 65 pips, and from the wick we were 37 pips away. So very, very close. In that case, honestly, for just the little pips remaining, I would just close the trade, not take any chance, because even if this level minus 27 and 127 was a big level, it got through. But as soon as it reached the 161.8, we had a bit of difficulty, so I would not risk all the pips accumulated on the 4 positions for just a bit more of pips. So actually I would close the trade right here. I would get out, so somewhere around here, whatever, it doesn't matter. At that point you had a successful trade. So around here I would close all my positions, and that would be my trade. Okay, now if we continue, let's just curious to see what happens. So you see here, market goes back up, respect the minus 27 and the 127, acts like a support resistance, come and touches my trend line right over here, bounces back. Now are we going to break to the upside, or maybe we're gonna go lower? Let's see, I'm curious. And let's wait. Okay, so here we broke, but just right before we broke, you see this wick right over here, right? We came just a bit short of the minus 61.8. How many pips difference from here to here? That's 9 pips, just 9 pips of difference. So let's say you put your take profit here, right? The market would have come 9 pips from take profit, did not touch it, and then afterwards broke to the upside. Maybe it's gonna go down later on, but we don't know. We don't know at that moment. But yeah, so that's why it's important to always, adjust your take profits with the reactions of the market, and not be too stubborn and leave it on a place, because the price could come very, very, very near it, don't touch it, and all the work we did before would not work, right? And yeah, so here we have a bit of consolidation. Actually, we have an inverse hand shoulder, broke the 50 MA, so maybe we're gonna look at a retracement to the upside, maybe to this trend line, right? But at that point, it doesn't matter. We did our trade, right? 4 positions on gold. Beautiful trade. Let's count how many pips. So here we made, so here on gold it's written 3083 pips, but actually it's 308, just the way they count them on the market is different. So let's say 308 plus 372 plus another 250, so plus 250, and another 128, so plus 128, and we have 1058 pips on this beautiful trade on gold. How much time did it take from here to here? Took 4 days, right? So just under a week, a trading week, which is 5 days, right? So 1000 pip on one trade on gold. So this is one trade but with 4 positions, because it's always the same fundamental idea, the same direction. You just construct it along the way as you go in the trade, and that's it. Once again, beautiful trade. I hope you learned from this video, and yeah, I see you next time. Bye.